This is the Rich Dad Radio Show. The good news and bad news about money. Here's Robert Kiyosaki.
Hello. Robert Kiyosaki, the Rich Dad Radio Show, the good news and bad news about money. And we have one of our favorite guests. It's also one of my favorite people to talk to because you always know where Harry Dent stands. You don't have to guess. You know, I hate it when people are wishy-washy. And there's one thing about Harry Dent. He's not wishy-washy. You give me his point of view. And that's all I ask, right, Kim?
That's what he does.
And so he made a prediction that the biggest crash was coming in April. And I was, waiting excitedly about it. It didn't come. And now he's calling for June. So we're going to talk about with Harry, why delay, but really what's really going on? How is this house of cards being propped up? But more importantly, whether it comes June, July, August, or next year, are you prepared for it? I think that is the most important question. Any comments, Kim?
Well, I love talking to Harry because he's got a great sense of humor. But he's also
I have to with my forecast. I have
to. He's also a facts guy. He's facts and he's demographics. And I like that a lot because there's so many opinions out there and so much to figure out what's real and what's not real. So I like the facts and I like the demographics. So,
and for people who may not understand demographics, you see the baby boom generation was the biggest generation in history. And
we will never see a wave like that in the developed world ever again.
Right. But
and it already happened,
Right. And the demographics caused the boom. The question is the baby boom generation going to be the baby bust generation?
Yeah.
So
it already is.
Show, Harry.
Welcome, Harry. Hey, Harry, is your latest book Spending Waves or is there a new book?
No. I have so much crap on there. So many people do little books and audio tapes. The latest book was 0 Hour.
0 Hour.
That was years ago.
Oh, okay. Got it.
I'm not going to publish another book until I'm right. Okay.
I like it.
It's better to do it beforehand, but I've learned better to publish a book right after you're right than when you're still wrong.
So Harry,
that's good advice.
So Harry, you're really known as a demographics guy. So would you mind taking a couple of minutes to explain how demographics and how you predict the future using demographics?
Okay, number one, I am actually a cycle guy, and I only discovered demographics and cycles when I started moving from being a Harvard MBA consulting to Fortune 100 companies in the early 80s to working with entrepreneurial companies, which you guys will understand. And when I started doing that, I realized their customers were not the aging Bob Hope generation. They were the young, emerging, innovative, new technologies, new spending wave baby boomers. I discovered that in the early 80s. And when I started looking at these statistics, I'm like, oh my God, that's when I saw that baby boom wave, like, what? This is the biggest thing to ever hit the world in the developed world. And so I could see that boom coming. And at the same time in 1981, the US government started on an annual basis to do surveys of the spending patterns of everyday people from cradle to grave, 600 categories, including the fact that I quickly discovered the average person spends the most at 46 back then, now 47, moving towards 48. So I can predict how a new generation like the massive baby boomers are going to spend more money into 2007 and then slow down. And guess what? The reason we have nonstop money printing is to offset the decline of the baby boom generation. And this is the worst policies ever in history. And these central bankers are, first of all, going to be destroyed by the internet and blockchain technologies, number one. And number two, by being the dumbest asses in history to think you can offset a downturn printing money out of thin air and think it will go away.
Like I said,
you know where Harry stands.
Pretty clear, right?
I have to wonder where Harry stands in this whole.
So I got to ask. So because you went there. So blockchain. How is blockchain going to destroy the central banks?
Okay. So the internet back in the late 80s, early 90s emerged as the way to connect us to information around the world. I mean, this is, okay, so there was personal computers in the late 70s, early 80s, then the internet, now it's blockchain, okay? So what this does, blockchain is the internet of financial assets and money. And I always ask people, do you want more information or money? And of course, everybody would choose money. Well, most people, except for poor people, okay? And you know that. So this is Internet 2.0 in its early stage. And I'm measuring literally the internet and Amazon and now the blockchain and Bitcoin, 20-year lag, same thing. Early stage, baby boom, when it emerges and people think, oh, it's the next big thing. They overvalue it. Then it crashes. You know how much it crashes? 94%. That's how much Amazon and the internet crashed in the early 2000s. And then you have the real boom. Well, at the peak of this real boom of the internet, we're getting Internet 2.0, blockchain, financial assets. What could be bigger than digitizing all financial assets in the world and making them more efficient and easier to trade and greater access to more people? So this is the next big thing. But in the early stage, like 2000, 2002 crash, we're getting the second tech crash, and it's going to be about the crash of the internet bubble, bigger, but this early stage bubble in Bitcoin as well. So I am thinking, listen to this, you could get Bitcoin 90% off in just a year or two, and then I would buy it. Bitcoin goes back to where it's been recently, and then it will, I think it's going to go to 500,000 to 1 million. And only because it's the gold standard of the new digital global monetary system, which, listen to me on this, most important thing in all of history up until this point, governments can no longer manipulate their government and country monetary system by printing more money or cheating or devaluing their currency or whatever. So this is a big deal. But
Harry, let me ask this question. How does blockchain affect the Fed? What is, from your perspective, I just want to know is, because what does it mean? If you were them, what would you say?
Okay, it just creates a new peer-to-peer. Okay, internet number one was peer-to-peer communication. Anybody, anywhere in the world could communicate, access any information anywhere. You know what? You know how many research staff I had 10 years ago before the internet, or 23? Now I have half. Okay, half a person does all my research. I'm sure it was my partner. Okay, because the internet made information easier to access, and I no longer had to say, "Oh, Jeff, could you find out to me the price of gold back in 1974?" No, I would find it on the internet and then have him go into it and dig into it and develop all the charts. 3 times more effective, okay? So that's the difference. This is in financial assets. I mean, we are getting wealthy and wealthier over time. That's what you've been preaching forever. Every day people can get wealthy if they're just smart in this economy where we created a middle class after World War II. Now we're creating an upper class of people, an upper middle class that actually has financial assets. Even the middle class in the 50s couldn't invest a dime. So this is a big deal, that financial assets and investing can be digitized and made more efficient and more available to everybody. So it's the democratization first of incomes and now of wealth. And what's better than wealth? Screw incomes. Wealth is better.
So if you're a Jay Powell of the Fed, and then you have Janet Yellen, and you have Biden and Kamala.
I know, us too.
Oh my God. These people are morons, academic douchebags that never had a job or had sex or run a business. Why should they be running our monetary system? This is the biggest insult. And you know why I like blockchain and all this information technologies? It's going to kill these central banks. Central banks are the last vestige of top-down management. It started with countries and big company stuff. It's going down more and more to bottoms-up entrepreneurs, people who create real value and real money and stuff. And these people are going to die. Janet, I look at her picture and I say, she looks like the Tweety Bird. I thought Woody Cat. That's what I see when I see her. Well, how does she become the Treasury Secretary after the Fed chairman? How did this happen? She's never done anything ever in history. An academic researcher. This is insanity.
Yep. So
Jerome, I like Jerome better. At least I think he had a part-time job at one time. Never. None of these guys.
So isn't the government going to try and step in on this blockchain and try to put controls in and take it over?
That's the point. It's bottoms up. You cannot squash this. That's what I love about it. I've always been a champion of bottoms up technology. I mean, the information revolution from the beginning on the internet. How can you squash anything when anybody can learn anything? And again, my research from 3 people to a half a person. Okay, so it gets harder and harder to squash. The truth about history is farther you go back, fewer people controlled all the wealth and everybody else was a peasant, okay? Well, it's become more and more, middle class. That was a big step up. Middle class, you still can't. Well, what are you going to do as middle class? Take a vacation to Florida once in your lifetime? It's not that great. This is about making more and more people entrepreneurial, knowledge professionals, access to information, and be able to work with other people in a way that just would have never been imagined. So again, personal computers, internet 1.0, and now blockchain digitizes all of finance and money. Money is worth more than information. Would you agree?
Well, they go hand in hand.
2.0 and 1.0.
So one more thing is that when I look at what Biden is doing and all this stuff, I was talking to my accountant last night, and he's looking at the new tax changes coming up. He thinks, or his belief is, they want to shut down small entrepreneurs because they threaten them.
I know, and that's not good policy. I agree with you on that. I've been saying we're in a democratic era because once the economy slowed down after 2007, because remember, we've been living off of free money since. The economy really peaked in real terms in 2007, as my indicator said, 20, 30 years before it happened, okay? So they're printing all this money and stuff. So all these efforts, I mean, the Democrats were naturally to come in and help people who were falling behind and stuff. But the truth is, the only way you grow long-term is to encourage entrepreneurs and entrepreneurial investment. I'm known for demographics. My favorite chart is the S curve. Something starts at 0.1%, a visionary, to the 1%, the entrepreneurs that first jump on that and do something with it. And then 10% when it goes mainstream, then it goes 10 to 90 in the same time. It took all that time to prove it in niche market. Innovation and technologies and new businesses is the key driver, and demographics, when new generations come along and spend, is number 2. It's still big, but the technology and innovation cycles are even bigger. So the demographics are slowing around the world, but the innovation can still rise here.
And then the thing I like about this new generation, millennials and all that, they're tech savvy, but they're also more aware of the Fed than we ever were, our generation. They don't trust the Fed. That's why they're into Bitcoin and things like this.
Exactly. They're inventing Bitcoin to get around this top-down economic manipulation. You're right. They're not smarter because they're smarter. They're smarter because they're new. Anybody that walks into something that's already existing, which I used to do as a consultant all the time. I walk in all these businesses already, growing, existing a long time. And I'm like, why are you doing this? What the hell? Well, the millennials are smarter just because they're coming. And of course they would not want the Federal Reserve and central banks to keep controlling and manipulating the economy and doing all this stuff. And in the end, blocking entrepreneurial innovation. And the other thing, Robert and Kim, it's very simple. every generation. We evolve. Everything evolves. People are more creative, more intelligent, more educated than ever, even the worst of us, okay? And so we're always going to become less corporate, and some boss has to tell us what to do, into more innovative and entrepreneurial, where we can find what we know the best and create a new business or something different and be rewarded. So that's why I like this bottoms up. Blockchain just makes the economy even more bottoms up than the internet did. So I love this stuff.
So Harry,
I can't wait for it to take it.
We have to go to a commercial break. When we come back, I want you to go into why you think this economy is going to crash, which I agree with. I'm just waiting for it. But more importantly, are you prepared for it? So that's what we're going to look for in the second half of this program. I'm glad you endorsed the new millennial class coming up, because they're more savvy, or more aware, should I say, of the corruption in the Fed and the Treasury. So when we come back, we'll be more to Harry Dent of why he predicts this crash is coming, and more importantly, what you can do to prosper from it. We'll be right back. Welcome back, Robert Kiyosaki, the Rich Dad Radio Show, the good news and bad news about money. And today we're talking about what's going to happen with blockchain, Bitcoin, the new millennial generation taking over from the old guys, the baby boomers. And we're talking to Harry Dent, and he's known for the demographic predictions that have come true. And you can listen to the Rich Dad Radio program anytime, anywhere on iTunes, Android, or whatever it is. And all of our programs are archived at richdadradio.com. We archive them because we're only an education company. We make no recommendations what to buy, what to sell, what to invest in. But if you listen to this program again, you'll learn twice as much, because repetition is how we learn. But more importantly, if you have friends, family, and old people who need to hear this message, like baby boomers, get them to listen to go to Rich Dad Radio program and listen to Harry Dent on this podcast, and why the technology of the younger generation and blockchain and Bitcoin and Doge and Ethereum and Ripple and all the other stuff coming on is the future, and it's going to tear down the old.
And I love that. And I love the first segment. You may want to listen to it again. I mean, Harry, you talk about entrepreneurs and the small business people, and that's the backbone of the developed countries. So it upsets me that I see that being attacked by this government, and I'm one to stand up and do something about it. I do have a question before we get into and it's part of all related of what's happening with the economy, but we love that Robert wrote a book called Fake, and you talk about the fake earnings, the fake GDP, the fake interest rates, and all this super high valuations. What would you explain that? Why is it all fake?
That is exactly what it is. So people say, oh, price to earnings ratios on stocks are not quite as high as they were in 2000 at the last tech bubble. No, Robert's right. You guys are right about this. It's like ever since the 2008 crash, the stimulus has been so massive that GDP is fake. The earnings off of that for companies is fake. And then you have high stock valuations on top of that. So I have an indicator where I adjust the price earnings ratios for the difference in the actual 10-year growth rates of earnings in the economy. And stocks are way more overvalued than they were at 2000, top of the tech peak, or 2007. So you're right. Fake is a perfect name for it. Since the economy failed for the first time, you got to remember, since 82, the worst economy since 82 and close to 1930-32, governments panicked, and they also had new tools called, we can print as much money. They didn't know this before. They only printed 6% of GDP, the US, at the worst of 1932 crash. 6%. We are now, between fiscal and monetary stimulus, in the last year and a half, 55% of GDP, we are creating out of nothing to keep a dead economy. I'm telling you, dead economy going, because the baby boom stopped spending and still are in their lowest stages into 2022-23, and we have the highest debt ratios. Oh, and how do they deal with the debt crisis? Add more financial assets by printing money and putting it into stocks. Stocks are so disconnected from the real economy. If you're sitting in stocks, you should be in terror.
Okay,
they're going to have to crash soon.
Let's get to my favorite subject. Why is it crash, and why didn't it crash, and when's it coming? But more importantly, what can we do? Because I agree 100% with you. This one is going to be the biggest in world history. I mean, we're not the only guys saying this. Records are saying, a lot of guys are saying, this one is going to be the biggest in world history. And it always happens just after the peak, when we're peaking right now.
Yes, we are peaking right now. Now, again, the demographics already peaked in 2007, but they pumped it up into now. I mean, all artificial. So this bubble is worse. And I think it normally would be like the 29 to 32 crash, 80 to 90%. They may just still, even when governments fail, and they are going to fail, they're going to be so embarrassed, but they may keep it from going as low as I see the Dow as low as 5,000 and at best 12 to 13,000 in a couple of years from now. That's going to wipe out a lot of wealth. Real estate doesn't fall as fast as stocks, but real estate fell 34%, as you guys know. In the last downturn, it's going to be 40 to 50% this time.
Harry, and the sad part about it is, the people we hang around with, I better buy a house now because the prices are going up. I'm going, why don't you wait a year?
They're all doing it.
People are panicking in. I have to buy one. No, I mean, I'm in Puerto Rico and I may have to buy one because there's nothing to rent here, but I'm only going to buy, I only have 2 real deals I'm looking at. Otherwise, I wouldn't touch it with the 10-foot pole. And Puerto Rico's nowhere near as overvalued as Miami and New York and San Francisco.
Well, that's why when they measure inflation, it's CPI, Consumer Price Index, but they don't measure asset price index. Yeah. And so anyway, let's go. Why is it going to crash, Harry? Why is it going to crash?
And when?
Okay. I think there's 2 periods right now between late April and early June. I'm seeing a potential top forming. I tell you, the problem I have now, there is no logic. The stock should have peaked before this, okay?
Right.
On my cycles, when I take the technology cycles, the most powerful, and the demographic, because the technology cycles are actually more powerful. Stocks should have peaked in late 2019, early 2020, just as they did when COVID hit. But when COVID hit, the government, it was such a shock. The government just went off the charts. That's when we got this 55% of GDP stimulus. I mean, if anybody 10 years from now or 20 years from now, when I'm probably likely dead, looks back at this and doesn't say these people what were they smoking? Just to think you could just print money and not deal with what happens if you're a business and your industry slows down. You have to cut costs and refocus and all this stuff. Well, we didn't do that. Oh, no, you just print money and gloss it over and then crawl out of it. You know what this recovery's been since 2009? 1.6% GDP growth a year for 12 years. The worst recovery in all of history. And you think, well, the stock market would be going, ho, hum, ho. No, stock market looks like the best boom in all of history. The stock market is full of crap, okay? Period. And it's going to fall to get down to this reality because the economy not only is overvalued because it's been growing so slow, without the stock market stimulus of at least the rich people feeling more, wealthy and spending more, the average person hasn't spent more or earned more in 20, 30 years.
They've gotten more. They've gotten more from the government. they haven't earned it.
Anything they did, they got from the government, which is also unhealthy. You can't make things work by giving people things for free.
Right.
So number one lesson I've learned in life, number one above all other things, other than they may be a God somewhere, is you don't get something for nothing, period. If you do get something for nothing, bend over because you're getting ready to get a really painful experience.
Yeah, I'm kidding. Here's what the young kids don't understand. And they're like, we get all this money, or anybody, we get all this money. Oh, this is great. This is great. This is great. What they don't see is there's going to be a big price to pay. They don't see that.
Where did it come from?
Yeah. Yeah.
You could just create prosperity by printing money. Then why didn't we do this 100, 200 years ago? Are we stupid now? No. This is, I am going on record, and I've been saying this for years, before I die or just after, people are going to realize this was the stupidest, most idealistic, ill-informed economic policies in all of history. You thought the roaring 20s was a bubble and burst. This is going to make that look like nothing because it's all assets globally, and everything's going to burst except the highest quality treasury bonds and financial assets.
What's gonna bring it down? What are we looking at? What are the key factors that are gonna?
No, it gets so extreme. I mean, the economy keeps every recovery is like limp. Stocks go up because money coming in. Oh, and they push interest rates lower. When interest rates go lower, real estate and stocks go higher just because of artificially low interest rates.
Harry,
it's all fake. Harry, you guys understand that, right? Fake?
I understand that.
Harry, this is where you piss off guys like me because you say gold's going to go to zero, silver's going to go to zero.
No, not zero.
Oh,
no. Gold is going to hold up better than any other major commodity, but
you said $400.
Gold did go down in 2008 at the worst of crisis. It will go down again.
Wait, Harry, please listen. So look, for the economy to stay up, they've got to keep interest rates low. They raise interest rates, the bond market crashes. So how in the world can you recommend high quality treasuries? Is there such a thing?
Oh, there is. Look at 1930 to 33.
No.
Go back, Robert. One thing went up.
2020.
U.S., the highest quality treasury. Look, bonds go down. This is a financial reset. Corporate bonds, any bond with any risk, only the risk-free bonds go up. It's a flight to quality.
But how
I will bet you on this today. If we have a downturn, the treasury bonds will go up and stocks and all other bonds will go down.
Harry, how in the world can you recommend treasuries when they're the most corrupt persons run by Janet Yellen and the Fed, and you're still recommending these treasuries at the lowest rates in history?
Okay, here's why. Who's borrowed more money in the last 2 decades? Europe or the United States? Who has higher debt ratios? Who has higher money printing? We are the best house in a bad neighborhood. We're the largest country in the world with better demographics than China, Japan, and Europe, our competitors.
But I wouldn't touch.
That's why we go up. We're the best house in a bad neighborhood. I can't say more than that, Robert. If you don't get that, I can't argue anymore.
I wouldn't touch a treasury. But why I just want you to tell me why. Because I don't like treasuries. I don't like stocks.
Where do you put your money in, Robert? Where are you going to put your money? In your backyard?
No, I'm in real estate.
That's not a bad place, by the way. Cash is good.
Gold, silver.
Cash is great.
But they're
Treasury bonds are greater.
They're printing it. Why in the world would you save trashy cash? I mean, even Dalio says cash is trash. And I think bonds are the biggest corrupt things that ever happened because it's run by Grandma Yellen. And I'm going, holy mackerel.
Do you think under the worst circumstances that if the U.S. government defaulted on anything, it would be their treasury bonds?
No, I don't give a shit. So. I don't trust them.
What about
you? Trust them? I don't know why you
tell me what to buy, Robert.
I would rather have Bitcoin.
It's not that. You just have to be in cash in another currency. And what better currency than the U.S.? Because I'm telling you, I can guarantee you, and the last crash proved this as well, when the you-know-what hit the fan, U.S. dollar went up 28%, and the euro and the yen and all these Chinese yuan went down. So, we're the best house in the bad neighborhood. I will stand on that prediction. We are not good, but we will hold up better.
And I will stand by Bitcoin all day long before the dollar.
Yes. Now, I agree with you on that. If you want to put your money somewhere, put it in after a crash. Now, Bitcoin needs a crash here, okay? If Bitcoin gets back down to reality at $3,000, $4,000, $5,000, $7,000, I agree. I would put it in Bitcoin any day over any currency or any other stock. So I agree with that.
So if they're printing so much money and then the dollar becomes worthless over time, why are you saying gold?
The dollar's been stable for decades now.
But why would you say that gold is going to go down?
1971 has gone up. Every gold bug tells me the dollar's going to hell. It's not. It's been the best currency.
So why is gold going to go down?
Because we have a downturn in the economy, downturn of demand of gold. And here's the biggest reason. Everybody's thinking because of this money printing, we're going to have higher inflation. The downturn will bring deflation. That brings gold down temporarily. You know what? One of the first things I buy in the bottom? Gold. I buy U.S. stocks. I buy Asian stocks more so, not China, everything but China.
Our price for gold.
Look at 2008. Gold went up into the early stages. People thinking, oh, gold will be the safe haven. It crashed 35% at the worst and then came back and did well. That's the way I look at gold. I'm not a bear on gold. And in fact, we have another 30-year commodity cycle, one of my favorite cycles, my first cycles I discovered in history, coming from 2023 to 2040.
Harry, answer me this question. If they raise the price of the bond to 10%, the bond market collapses. Why would you hold on to them? Tell me why.
Which bonds are going to go up to 10%?
If they raise the price to 10% on the interest.
Who's going to raise the price to 10%, Robert? U.S. government needs to raise money in a downturn. They're going to lower the price, and deflation is going to lower the price. Nobody's going to see, in a year or two, mark my words of this, nobody's going to see any chance of inflation ever again in the rest of their lifetime, although that will be wrong.
What? So there's no.
That's when bond rates go down, and the high-quality bonds benefit from that. So low-quality bonds get hurt by default risk. The U.S. Treasury is going to be the least default risk in the world.
Harry, you're calling for a major depression.
I am.
Good.
Then and look at the Great Depression. U.S. Treasury bonds went up. Corporate bonds went down. That's what I'm telling you, Robert. I've researched this. You think I was born yesterday?
I'm gonna stick with
I've researched this. Look back at 1930 to 32 if you want to look at the Greatest Depression. The U.S. Treasury bonds were the safe haven. Gold was not.
Harry, you're like a white guy who speaks with forked tongue. I mean,
I speak with actual facts. You have not done your research here. Look at 30 to 33 crash, and you'll see what did well. Everything went down except for U.S. Treasury bonds.
And that was history, Harry. That was history. You're living in the past. My friend.
You want to make a bet on that, Robert? I'll make a bet to you 2 years out whether Treasury bonds will be up or down. I'll make that bet today and pay you back.
I wouldn't live in Puerto Rico. I don't have to live in Puerto Rico because I don't have to pay taxes because I'm a real estate guy.
I don't pay taxes either. That's why I live in Puerto Rico. I'm saying I will take the bet with you today. 2 years from now, Treasury bonds will be higher, not lower. I'll just take that simple bet with you, and you or I admit we're wrong by the end of 2022. If that happens, I'll take that bet with you any day of the week. I'm that convicted.
Harry, I don't have to. I don't
have to either, Robert.
I don't have to live in Puerto Rico like you do.
Idiot? I don't have to either. I will take that bet, and you will not take it. That's what I'm telling you.
I'm not going to have to, Harry. Hey, Harry.
I don't have to either, but you will not take it, and I will. That says something.
You did take it. You drank the Kool-Aid. I didn't have to.
I will take that bet, Robert. I don't have to take it. Something.
You live in Puerto Rico. I don't live in Puerto Rico. You live with all those guys who are afraid of taxes. We don't have to pay taxes if you're smart. Harry, thank you very much.
We don't either. We're smart because we live in a good place. We don't have to cheat to do it. We don't have to cheat. We are legally endorsed by the U.S. to give these tax advantages.
Harry, we're out of time. Good luck on your bonds. Have fun in Puerto Rico. And have a good life. Anyway, we love you, man. Thank you,
Harry.
Thank you. I love it because you always tell us where you're at. So thank you very much. Bye. Have fun in Puerto Rico. Welcome back. Robert Kiyosaki, the Rich Dad Radio Show, the good news and bad news about money. I want to thank our great friend, Harry Dent. I mean, Harry and I travel the world together, and it's called edutainment. It's because we don't agree. And I think that's what makes it good at educational, because we all have a different point of view on it. So anyway, I want to thank you for listening to the Rich Dad Radio Show. You can listen to it anytime, anywhere on iTunes, Android, and YouTube. And please leave a comment whenever you want to. All of our programs are archived at richdadradio.com. We archive them because we're only an educational show. We don't make recommendations. We don't say what to buy or sell or what to invest in. But most important, have your friends, family, and business associates listen to it because that's how you learn. When you review the show, you'll learn a lot more. Discuss it. And just know that in the world of money, there's millions of ways you can get rich. And there's billions of ways you can get poor. So that's why you listen to the Rich Dad Radio Show. And again, really thank you for Harry Dent. It's always entertaining traveling with him because we don't agree.
Well, you agree on a lot of things.
I know.
But I love Harry because Harry has another point of view, and it's a point of view that I want to pay attention to, and I'm going to look at 2022 and the Treasury bonds, and I'm going to look at what's happening in June and July, and is this crash happening at that point?
I hope it does happen.
And in reading too, I mean, one thing you guys do agree on too, because when you both were calling for crashes, you both said. You never anticipated they would be printing so much money to keep it propped up. So had that not happened, this crash would have come a long time ago.
But also, Kim, you and I make more money in a crash.
We do, because we're not in the stock market.
Yeah, that's why not. Well, even in real estate.
Yeah.
When it crashes, that's when you get rich.
And it depends. This is the other thing. In real estate, when it crashes, it depends on what kind of real estate you have.
Yes.
Okay? So if you're in commercial real estate today, office buildings, you're in trouble. But most people are just thinking of their private residence. When it crashes, their private residence goes down in value, and they think their house is an asset, and it's going to go up in value, and oh my God, I'm worth this much money. But no, you're not, because you're not selling your house. And if you sold it today, where are you going to go? Everything is.
This is the worst thing, is that I won't mention the people's names, but they're jumping in because they think prices are going up.
Yes.
And every time you're jumping in when prices are rising this fast, you're going to get screwed.
Yep. And
I can't say anything because it's our friends of ours. Well, I got 3 kids, I've got to have a house. And, prices keep going up, and they got sucked in.
They're panicked, yeah.
They're sucked
panicked
in because we're in a bubble.
Yep.
And when this next crash comes, they've already bought the house, unfortunately. I couldn't talk them out of it. But they're going to be stuck with what's called an alligator. It's going to be worth a lot less than what they owe on it. And it happens all the time, and that's when people like Kim and I come in, and we relieve them of their misery. And that's real investing. So crashes are great times if you can recognize that we're at the top of a market. So for all of you right now who think, who's right, Harry or myself? No, we're both right. It's going to crash. Question: what are you going to do about it? Right? That's
exactly right. And what assets are you looking at today that you can prosper in the future from a crash?
Yeah, and I've always said that if Bitcoin goes down to $2, I'm going to load up. Do I give a crap? No.
And if Bitcoin is at, I don't know what it is at today, let's say 50,000 something. 56. Well, if it's going to go to $500,000 to $1 million, I don't really care if I buy it at 50,000 because I think we'll have a nice profit there. So I'm not too concerned about, you can never find a bottom. And if you're waiting for the bottom, you're going to wait forever. And I think that's a silly. If you want the price to go down, but people go, I'm going to buy at the bottom. We never know when the bottom is.
And this is the other part about it is, I say gold, silver, Bitcoin. Well, try buying gold and silver. It's gone. There's nothing in the stores. It's like ammunition. You can't buy ammunition. So I tell you what, ladies and gentlemen, these are not ordinary times. And, Harry's very big on treasuries, which I really don't, because I've never owned them. I don't like them. I don't trust the Fed. I don't trust the Treasury.
Well, you certainly can't control them.
No. So, it's all manipulated.
Yep.
And so that's why, ladies and gentlemen, Rich Dad is a financial education company. And education doesn't mean you have to agree with us. You don't have to agree with Harry. But you'd better find the way that works for you. So I want to thank you for listening to the Rich Dad radio program. Sarah, final comments.
Just another great show with Harry. I wrote down all of his predictions. Dow to 5,000. Bitcoin's going to be 90% off. Treasury bonds are going to go higher. So we have a lot to do over the next 2 years because he was predicting a lot. But I love having Harry on because although we disagree, it's the other side of the coin. And that's what we're here to do, is present the other side of the coin.
Well, he's in different asset classes. He's not a real estate guy.
Right.
Understand, if you guys can understand that. And Kim and I live in Phoenix, Arizona, because we came for the crash. And we backed up the truck. Kenny McElroy, we just backed up the truck in 2008. We borrowed like $300 million, something. I forget how much we borrowed anymore. But we use debt as money. And so Harry uses cash. We use debt. So if you can hear the differences in our arguments, you'll be smarter. So Kim and I love debt. Harry likes cash. Why would I like cash when I can use debt to buy real estate? That's the difference, okay? So thank you all for listening to the Rich Dad Radio Show. Thank you to our friend Harry Dent, and you always know where Harry's at because he'll tell you why he's right and you're all idiots. Thank you, Harry Dent. Bye-bye.